I'm buying more Pepsi stock from $135. Here is why. Despite the uncertainties, let me walk you through why the stock is falling and why I think this is a fantastic opportunity to own an iconic brand. PepsiCo stock was falling after its quarterly earnings missed expectations, and drinks and snacks company lowered its forecast for the year. Pepsi reported first quarter revenue of $17.92 billion, down 1.8% from the same period a year ago, and earnings per share of $1.33 missed Wall Street analysts' expectations. Pepsi said it now expects its full-year core earnings to be approximately flat from the previous year, having previous forecast mid-single-digit percentage growth. It still expects a low single-digit percentage increase in organic revenue. We expect more volatility and uncertainty, particularly related to global trade developments, which we expect will increase our supply chain costs, CEO said. At the same time, consumer conditions in many markets remain subdued and similarly have an uncertain outlook. Pepsi shares were down 32% to $135 from the peak of 2023. Pepsi's revenue has been falling on a year-over-year basis for the past 2 quarters in a row thanks to weak sales in the North America market. Its Quaker Foods business, particularly, has suffered from fallout from product recalls in 2024. The softness will likely continue. Like many packaged food peers, Pepsi has been struggling with sluggish sales as consumers pull back from spending amid inflation pressure. The rising popularity of GLP-1 weight loss drugs has further dampened appetite for snacks and sugary drinks. Meanwhile, Health and Human Services Secretary Robert F. Kennedy Jr. has openly declared war against ultra-processed foods that are high in sugar or contain synthetic ingredients, such as petroleum-based food dyes. He wants to prohibit the purchase of soda and junk foods with food stamps, and is seeking to have food companies either remove the ingredients he deems harmful or label them more prominently. All these factors could hurt packaged food companies' sales and profit margins. Aside from regulatory pressure, consumers themselves are increasingly leaning towards healthier foods. While Pepsi's most popular products usually cater to flavor rather than health, the company has been expanding its portfolio to accommodate the shifting preference. Last month, Pepsi announced a deal to acquire fast-growing probiotic soda brand Poppi for nearly $2 billion, and so-called probiotic soda often contains fewer calories, less sugar, and added fiber. We expect more volatility and uncertainty, particularly related in global trade developments, which we expect will increase our supply chain costs, CEO said. At the same time, consumer conditions in many markets remain subdued and similarly have an uncertain outlook. PepsiCo is working with mitigation actions to address the higher supply chain costs where possible, while trying to minimize disruptions to its operations. Part of the outlook cut was also driven by softness in the company's Frito-Lay brand, where volumes are weakening, particularly for larger pack sizes that have higher price points. Consumers are feeling pressure to spend less cash overall, so they're opting for smaller package sizes that don't cost as much. PepsiCo is shifting into smaller single-serve offerings and smaller multi-packs to meet that demand. We're putting more emphasis on those entry price points and making sure that we're not asking for large amounts of money for participating in our brand, CEO said. Pepsi is also dealing with weakness in the convenience store channel, where traffic is slowing. PepsiCo is looking at meal deals and other special offerings it can provide to its partners in the C-store channel to improve its single-serve product performance, executives said. PepsiCo saw an uptick in its beverages business, saying it gained shares in carbonated soft drinks and sports drinks, led by sales for Pepsi Zero Sugar and Gatorade during the quarter. Both tariffs and the healthy snack trend is short-term negative. It doesn't take away the long-term opportunity the Pepsi brand has. Pepsi and Coke are rivals, and one day Pepsi will rise again. Of course, Pepsi is a safety stock, which means it tends to do well when tech stocks fall. But when the recession hits the U.S., it could fall with the major market. Just so you know, I will just buy more when that happens.